All right, we are all set to begin. I hope you are sorry to keep all members of the audience waiting. We are all set to go right now. Welcome one and all to the Commodities Outlook by CME Group and David Hightower. This is your facilitator of the day. My name is Sri and I am from Liquidity Futures. I'm really excited to have the founder of the Hightower Report, David Hightower himself, as a keynote speaker for today's webinar. The Hightower Report, as you already know, hightowerreport.com is a commodity research and information firm specializing in high-quality futures research and analysis for individual investors, brokers, as well as commercial producers, farmers, and end users as well. The Hightower Report publishes one of the most widely read commodities wires in the world. Along with David, we have Nelson Lowe, Nicholas Dupois, and Sachin Patel, who will be joining us very, very shortly. And they are from the CME Group. Nelson is the Executive Director for Agricultural Products in Asia Pacific. Nicholas, who I've had the pleasure of working with several times already, is the Senior Director for Energy Products in Asia Pacific, and Sachin is the Senior Director for Metal Products, also for Asia Pacific. Some of the key talking points today for the webinar include the outlook for commodity sector, update on CME's metal products, update on CME's energy products, and update on CME's agricultural products. And now, before we kick off the event proper, we will hand the reins over to our partner, TDT Asia, to tell you more about the services they offer in AI, financial, and offshore fields. But before we begin, I just want to let the members of the audience know that we will have a translation in Vietnamese, so it will be easier for you to follow when we transfer from one segment to another segment.
Dạ vâng ạ. Xin chào mừng tất cả các khách hàng đến với hội thảo góc nhìn về thị trường hàng hóa tổ chức bởi CME Group và David Hightower. Tôi là Seri đến từ Philip Singapore, Philip Futures Singapore. Hôm nay tôi thực sự vui mừng được chào đón diễn giả chính của hội thảo là ông David Hightower, người sáng lập của David Hightower Report, công ty chuyên nghiên cứu, cung cấp các phân tích chất lượng cao về thị trường hàng hóa cho các nhà đầu tư cá nhân, nhà môi giới, nhà sản xuất thương mại, người sản xuất và người tiêu dùng. Báo cáo hàng ngày của Hightower nằm trong số các kênh thông tin được các nhà đầu tư tìm đọc nhiều nhất trên thế giới. Buổi sự kiện hôm nay cũng sẽ có sự tham gia của các chuyên gia về sản phẩm hàng hóa đến từ CME, chia sẻ về xu hướng mới nhất của thị trường nông nghiệp, năng lượng và kim loại toàn cầu và những cái tác động đối với thị trường Việt Nam. Đầu tiên đó là ông Nelson, ông là giám đốc điều hành phụ trách sản phẩm nông nghiệp khu vực châu Á Thái Bình Dương. Tiếp theo là ông Nicholas, giám đốc cao cấp phụ trách sản phẩm năng lượng khu vực châu Á Thái Bình Dương, và ông Sachin là giám đốc cao cấp phụ trách sản phẩm kim loại khu vực châu Á Thái Bình Dương. Và trước khi các chuyên gia bắt đầu chia sẻ, tôi xin mời nhà tổ chức sự kiện này và cũng là đối tác của chúng tôi, công ty TDT Asia, sẽ có chia sẻ về các dịch vụ công ty cung cấp trong lĩnh vực AI và tài chính. Xin mời Lauren ạ.
Thank you very much, host and interpreter. So my name is Lauren, and I'm from TDT Asia. And today, on behalf of CQ TDT Asia, I would like to send a warmest welcome to all of you for your participations in today's webinar. So first and foremost, I would like to briefly introduce our business. Are you seeing my screen clearly? Okay.
Yes, we are.
Thank you very much, everyone. First and foremost, here are some general information regarding our establishment. TDT
Hey,
Asia would
Lauren?
establish, yes?
Lauren, do you want to put it on presentation mode so we can, so it'll be much bigger, easier for us to see?
Okay, I am putting it on presentation mode. Are you seeing it? Okay, are you seeing my screen?
Yes.
Thank you very much. Okay, so first and foremost, here are some general information regarding our establishment. TDT Asia was established with a vision to deliver innovative financial information system and software for the Asian market in particular and global market in general. Our human resources with up to 15 years experience in finance and market reality have been providing and transferring innovative solutions to our customers. We hold a belief that only creative spirits can initiate breakthrough values for our customers. Briefly about our current business. Our markets mainly targeted at Asian countries like Hong Kong, Singapore, Japan, and so on, but we also aims at expanding our business globally. Though providing diverse services, as you can see on the screen, the focus of TDT Asia has always been on providing financial solutions, stock, forex, and crypto solutions. To help you have a clearer understanding of what we have to offer, let me briefly go through some of our financial solutions. Firstly, regarding our forex solutions. So partnering with Philips Security Japan, FX is the fund trading system based on MT4 and MT5 platform and using the latest technology, offering forex, CFD, crypto, and so on. In addition to outstanding utilities and features such as all-in-one system, stability, quality, low cost, and securities, FX provides users with personal experience for unique solutions and high liquidity. Our stock trading platform provided to institutional and individual customers from Japan, Hong Kong, and so on. User can trade directly with exchanges like NYSE, NASD, SEHK, TSE, and we can do it on web trading, mobile trading, and app trading platforms. So our stock trading platform is provided to customers from Japan, Hong Kong, like I said. And as you are seeing on the screen, we are also very confident to introduce our monitoring system that we develop and provide for the maintenance of outcome system with reliability and 24/7 availability. So that is briefly about our business. That is the end of my introductions. We appreciate your attention and value this chance that we have to introduce ourselves. For further information, please visit tdt.asia. Thank you very much for your attention.
Thank you so much, Lauren. I'm sure our audience appreciated learning more about the services that TDT offers. And thank you once again for being our event host. All right, it's time for the main event right now. If our keynote speaker, David Hightower, is ready, I will hand the reins over to him. Olive?
Very good. Well, it's good to be here tonight. Is that a good screen there for you?
Sure.
Very good. Well, I appreciate the opportunity to present this morning for your time. The markets happen to be in a very significant juncture right now in two parts. The first part is in the financial impact on the agricultural markets from the potential for changing interest rates, the potential for inflation, but also we're entering a weather market in the South American production cycle. And we have on a 30-day outlook, we have about 30% of normal precipitation in southern Brazil and parts of Argentina. And so that has started to lift prices. The amount of swing in the stocks to usage and ending stock levels could be very significant. So it could actually, in the coming 4 to 5 weeks, we could either have a decision on 2022 being a bull market in commodities or a bear market in commodities, and in particular in the grain markets. And that production in South America is also joined by significant strength in energy prices. That adds to that inflationary scenario. We also have the meal market has been exploding on the upside, and at the same time, the soybean oil market has been falling. And so that's been making it difficult to get the necessary amount of supply of meal. So even though we have the supply, the market may not be able to get the right products at the right time. So if we flip on to the next chart here, the inflation theme is certainly there, and I would suggest that in 1980, in 1970, we saw inflation impact on grain prices, and it could add, by our adjustments, that could add 80 to 90 cents in soybeans, and it could add 40 to 50 cents on the value of the corn. As we sit here today, at the very bottom line there, I show that we have a $6 cost of production for North American corn for next season. And so we need to have high enough prices here that we will be able to get the necessary corn acres that we have in place. If we go to the next slide, we will have that biofuel impact on the market from soybean oil and biodiesel. We are seeing a decline in soybean oil prices, and what that will do is it will make it competitive with biodiesel and recycled oil. In the U.S., most of the biofuel diesel production that's being undertaken is with recycled oil and not necessarily from raw vegetable oil and other products. So there's a self-supporting mechanism for prices. By a decline in soybean oil will immediately ratchet up the amount of consumption of that supply for diesel fuel. So that battle of acres is going to heat up. It's going to be, will we plant wheat? Will we plant corn? Will we plant soybeans? So both sides of the market are going to have to bid up, and prices are going to have to go higher next spring in order to determine who and what will be planted. I also believe that we're in the midst of a Chinese destocking. They've been selling physical commodities in an effort to tamp down the costs of to their consumers and to their manufacturing facilities, and to help keep inflation down. And then they'll have to be back in where they'll be stocking up. And I'll show you later about how their import pace in the U.S. is a little bit behind a normal pace. If we go to the next slide, there's a historic relationship, and I guess we will be talking about oil a little bit later, but there is a very tight historical correlation between soybean oil and crude oil. And I would maintain that this relationship was established well before biofuel became an issue in the soybean oil market. And so it's a macroeconomic relationship. But as you can see, with the biofuel component here in the last 5 to 6 years, it's become even more and more volatile. The next slide, the corn market, similar situation here. You can see that actually the energy markets lead the corn market higher. And so that's what's happened already. And so it's very critical as we sit here at $70 crude oil, what the next move in crude oil will be. That'll dictate grain prices, which way they're moving. Also, we have very tight stocks of crude oil in the U.S., so we have become the big swing producer of the world but now our stocks are tight. If you look at over a 5 to 6 year period, how tight we are, and you would not expect this coming out of a recession with the coronavirus. But we have had a large increase in soybean production from a year-over-year increase. The volatility can be noted here by the ups and downs of these bars to show you the annual production change. So this is why volatility is here to stay in the grain market. So we will, if we get good weather in South America, we will ease the tightness in the oil seeds, and that may begin to put even more pressure on soybean oil. And as I said, it could get down to a price level in which biodiesel begins to consume large percentages of that supply. And I would like to say that the energy markets are large and the amount of money and consumption that's involved, whereas the grain markets are small in terms of what they would feed into the energy and biofuel area. So we can burn a heck of a lot of grains faster than we can eat grains, and that should be something that is noted. If you look at the next, even the corn market, as you can see, we've had very good production, but yet the stocks to usage ratio in the corn market has been coming down and production's been coming down. And I would also indicate that China has been liquidating its corn, and we just recently had a 6-month high in this week we had a 6-month high in Beijing corn prices, and so their destocking is not working yet, and they'll have to continue to sell into the market, but I think it'll be to no success. Palm oil, this is a major development that has been unfolding for the last 2 years, with Indonesia and Malaysia going to a mandated biodiesel requirement. It should be noted that both these countries, Indonesia and Malaysia, significant exporters of palm. They very rarely consumed much in the way of domestic consumption. They were always a big exporter. So when we find that these two major exporters are beginning to use their internal supply for fuel instead of shipping that out for consumption of food around the world, that all of a sudden makes a significant impact. The amount of palm production is about 7 times the production of all the other edible oils, peanut oil, soybean oil, etc. So a small incremental change in palm production can basically use up any of the available supply in some of these lesser vegetable oil components. So it's a very important thing to know, that a small change in how much Indonesia and Malaysia have available for export puts a tremendous strain on the market. Now, we've already seen the soybean oil market explode, and now we're seeing the soybean meal contract take over leadership from the oil. And they're afraid that if we don't get the yields on meal they need it for lysine, and if they can't get the lysine, they're going to have to go to soybean meal in these feed mixes. And so there's a lot of demand that justifies what's going on in the meal market. Another critical development in the meal market is that India typically was a large exporter.
Hey, Dave.
Yes?
Dave, we can't see your slides at the moment.
Okay, I keep throwing them up there and they keep disappearing. India is typically an exporter of soybean meal, and now they are now they're importing instead of exporting. So we have meal getting tighter, and we still have some vegetable oil tightness that is still out there. But palm oil production is going to rise this year. That's why I say we're at a significant juncture to see if we can get the production that we need. Last year, we had labor problems on the plantations. We had some weather problems, but now that should ease this year, and that's why the soybean oil market has been going down and will probably continue to go down. But as we go down, then the oil markets are going to lift up the demand and stop prices from going down. So here you have China, the production to usage. So both these countries, India and China, have large deficits. So no matter how much they produce, they're still in an import position. And India, if you look at the divergence between how much they produce and how much they consume, they are a major player, maybe even more so than China, but the trade very rarely focuses much on that attention. So U.S. oil, we have a new product that we're beginning to put deviations of soybeans, different qualities for the beans, different chemical compositions. And as you can see here with the blue line, this is a totally new demand source, a derivative of regular soybeans and the type of oil that we get from them. And so we went from virtually nothing in 2005 to now a quarter of the market is being used for methyl ester consumption. So the technology and the change that's taking place in these grain markets, the more you can make out of grains, different products, the higher the price will be. If you can make 10 products, the price will be 10. If you can make 100 products, the prices will be 100. And so that's a very important thing to note, because there are a lot of studies taking place now, effectively maximizing the amount of production for feed. So if we look at a soybean chart here, and we come down to, I don't know why that keeps disappearing. It keeps, you can see the blue line down there, and that's what I'm talking about, a 70 or an 80 cent break in the price of soybeans that I think will be a fair value. And if we have good weather in South America, will bring these prices back into some kind of historical norm. But the inflationary component that's out there and existing is going to keep a firm hand underneath the market and not allow a protracted bear market to unfold. And that's a very important distinction. So if we go on and you look into the soybean balance sheet for the U.S., what's important is the very bottom line here. It's not how many bushels or metric tons that we have of a commodity, it's how fast we're using that commodity. And so the very bottom line is a stocks to usage ratio under different product yields. So if we have a good yield, then the product supply will tighten up, and the stocks to usage ratio, as you can see, we'll have single digit stocks to usage ratios. And if you compare that to the prior 5 years, we're still going to be tight, but we're not going to be as tight as we were before. In the next slide, this shows the March board crush, and so we have a record crush unfolding right now. So we have good solid demand right now. This is a extreme outlier, and this same situation should be noted in the ethanol trade, where they have record ethanol crush margins. So demand is there, but big supply is also coming. We have a very slow start with the amount of soybeans that the U.S. is exporting from China. We stop the South American export when their supplies run out. We pick up in the U.S., and that's where we're at. I expect this to ultimately, I say it does not matter who China buys beans from. It just matters that China continues to buy beans. And so there is a lot of trade war stuff that's developing. A lot of it is involving high-tech companies and proprietary information and national security. But that also has an impact on how and where China buys their grain. So they don't have them available as much in South America right now because they're in between their crops. And they're planting the new crop, and so they'll have to come to the U.S. as a point of last resort. So if we flip on to go down into a little bit further down into the corn market now, running a little bit out of time. The corn market is going to be in a much tighter situation for next year. Why? Well, the input costs are going to be greater. And at the same time, the producers will look and realize it costs a lot more to plant corn than it does to plant soybeans. So your costs are you go hugely into debt in order to produce a corn crop, whereas soybeans are cheap to produce and therefore they're less risky. So what happens is that puts even more supply in beans and less supply in the corn market. So we have the opportunity to have a divergent situation here where corn and soybean prices may be going in opposite directions. The next slide, this is the profitability of ethanol. These are U.S. plants in the middle of the country in Iowa. This is the largest profitability they've ever had. And if you can see, $3.20 output per bushel of corn. So it's a dramatic. And what happens when you can make money, you produce a lot of ethanol, and that's same as burning that supply, because in fact we are, and the oil industry is using it up. So if you look, it's not only just that the battle between corn and soybean acres to who's going to get the amount of acres, but it's also going to be the wheat market. The wheat market has had historic prices. The cotton market has had historically high prices. And so we have this in the US in particular, this battle for acres, and it's not just between corn and soybeans, it's between 4 other markets. And so that whoever has the highest profit margin going into the spring, and the spring wheat contract, when they begin to plant that, will give us a huge indication as to what's going on. So if you look at Argentina and Brazil, corn production has continued to rise. See, so that's a given. The markets have factored that in. And in fact, I would say in the soybean market also, we factored in nearly a perfect crop. And then that's starting to be not perfect, as I indicated when I started. And so prices are starting to react to that. However, the speculative component in corn, these are the funds. The funds are very long the corn market. So they're already anticipating this bullishness. The wheat market, as you can see, 2 years in a row of deficits. The stocks to usage ratio has come down. And so there's the traders are speculating that the wheat market will gain more soybean acres than it has in the past. The next slide is all wheat ending stocks. And so as you can see, this is a precipitous decline. The Indians are huge when it comes to wheat exports. And so their weather conditions are also going to be something that's very important, because we had the lowest production in 19 years in wheat in the US. So it creates a tight situation all around, with the exception of soybeans. So the soybean market is not tight. The corn and wheat markets are tight. The energy markets are serving to lift all prices, and the potential for inflation could result in money moving from equities and moving from treasuries into an inflation hedge, which is commodities, and in particular agricultural commodities. So we can look at all of our internal fundamentals, but we're going to have a lot of impact from the big picture outside market influences. And if oil prices go to $80 and $90, as you saw in the beginning, it's going to drag these grain prices upward. So that's my story, and I'm sticking with it.
Thank you so much, David. It was truly an insightful overview of the commodities market. Members of the audience, feel free to type your questions into the question box, and we will address them in the Q&A at the end of the webinar. Meanwhile, Sachin, if you're all set to go, Sachin, if you're all set to go, we'll jump to you very shortly, right after Olive's translation.
Vâng ạ, xin cảm ơn David Hightower. đã chia sẻ một cái góc nhìn rất là tổng quan và rất sâu sắc về thị trường hàng hóa. Quý khách hàng tham dự nếu có câu hỏi dành cho phần chia sẻ của David Hightower, vui lòng gửi câu hỏi của quý vị vào cái phần ô chat và chúng tôi sẽ trả lời trong phần hỏi đáp ở cuối hội thảo. Và tiếp theo là phần chia sẻ của ông Sachin sẽ cập nhật các sản phẩm kim loại của Cme như là đồng, nhôm, bao gồm các cái hoạt động và xu hướng giao dịch. Xin mời ông Sachin ạ.
Hey Sachin, I'm gonna give you a keyboard and mouse control. You can attempt to see if it's working for you.
Hey Chikbar, can I first test that you can hear me okay?
Yes, we can.
Okay, great.
Hey Sachin, the slide does not seem to be loading fine on keyboard and mouse control. Let me facilitate the slides for you. Just let me know when you want to go to the next slide.
Okay, sure. Let's do that. And you know, I'm sorry, I seem to have had some technical issues on my end this morning and have not been able to get the camera on. But of course, thanks to the organisers of today at Philips and to everyone who's dialed in and is listening. And definitely thanks to David Hightower. That was really interesting. I would love to have borrowed some of the volatility that we've seen in the agriculture markets this year and put it into the metals, but perhaps 2022 will be a more interesting one. Now for today, we are going to focus largely on CME Group's base metals. Before we get to that, we have those two disclaimer slides. I'm sure you managed to read through them in those 2 seconds. And we can get going with an overview of COMEX copper, a very well-known market-leading product in its class. And after that, we will come to one of our newer initiatives in what is a huge underlying physical market, and that's aluminium. So thanks again. My name is Sachin Patel, and I look after the metals business for CME Group for the Asia Pacific region. Again, thanks very much for having me today. So, COMEX copper. Let's put some numbers around this particular product. So, COMEX copper has been in existence since, I believe, 1977. Coming up to 45 years of track record since its initial listing date. And over the years, and I would say really in particular in the last 10 or so years, the growth in this contract has led to it being considered really as a true international benchmark for copper price. And by many gauges, and certainly in my humble opinion, this represents the most liquid and easily accessible and certainly transparent form of price discovery in the copper market. So how big is this market? At CME Group, I'm sure the audience will be aware we have many different metal contracts listed, and copper is on average in the last few years the second biggest contract in our entire CME metals portfolio. So of course we have gold as our largest product in the suite, and copper is actually the second largest after gold. It is even a larger market in terms of notional traded than silver. So this year we've had about $13 billion worth of copper trade on average every single day. So one of our largest markets. Now, in terms of some of the unique features of this market, as with most benchmark products at the CME, the trading day is a hugely important thing to look at, and our copper market is open for 23 hours a day. So just a 1 hour trading gap, usually very early in the Vietnamese morning, probably 5 to 6 a.m. Every other hour of the day, and we'll come to the liquidity later, is open for trading, something that has become hugely important for customers in Asia as we start to see more pricing power in industrial metals in the Asian region. And of course, that comes with some added volatility and price movements outside of US hours. Now, in terms of the contract specifics itself, the contract is physically deliverable. We'll get to a little bit of that in a few slides' time. The size is in American pounds, so it's priced in US dollars and cents per pound, and it's 25,000 pounds, so about 11.5 metric tons. Now, one thing that I have loved about managing the metals business for Asia is how much metal volume gets traded in Asia. So copper, I have to say, is probably our most international contract in the metals portfolio. It may even be the most international contract in all of CME. And what I mean by that is the amount of copper that gets traded outside of US hours. So on some days, up to 45% of volume is executed from market open until about 7 a.m. New York time. So true liquidity outside of the traditional US trading hours. And then I think the last thing that is worth mentioning, given that a lot of the audience today will be familiar with our competitor in London, our contracts are futures contracts where daily realized variation margin, so daily realization of profit and loss, as opposed to a forward position which remains unrealized until expiry or closeout. So we can move on to the next slide. Now, market share. This is a slide that I love showing because I think a lot of our customers sometimes don't realize. As I just mentioned, of course, we are not the only listed copper market. Our competitor, the London Metal Exchange, has been around for even longer, about 150 years. And so we always look at our relative size in the copper market. And what a lot of customers, are only starting to realize now, that if you look at electronic volumes, so volumes executed, directly in the central limit order book on screen, we are actually the bigger market. So our market share is currently about 75% in electronic volumes. If you take overall volumes, we're more like a 30% and tracking for an all-time high this year. But in terms of the most transparent way of executing copper derivatives trades, i.e. directly on the screen, COMEX is actually the larger market. So hopefully that was maybe a little bit of new information today. We can move on to the next slide. Okay, so remember the feature of so many of our benchmark commodity futures and options. You can trade for 23 hours per day. So that's great. The market is open for 23 hours a day, but what does liquidity look like for those 23 hours a day? So I include this chart. Sorry, there's a lot going on, but just to illustrate how consistent the bid-ask spread is all day long. So we've gone hour by hour here at the bottom, every single hour of the day, and this is in Hong Kong and Singapore time. And you can see that, okay, the lower the bar, the tighter the bid-ask spread. But what you can see really is that every single hour of the day that we are open for trading, our bid-ask spread remains remarkably consistent. It is almost one tick or minimum tick wide all day long, and has a very consistent profile across the whole trading day. So no real difference between US hours, London hours, and Asia hours. Okay, we can move. Okay, so that's one measure of liquidity, bid-ask spread. What's another one? How much copper can you trade at the top of the book? So again, you can see here that for most of the day, it's a remarkably consistent. Again, you will get anywhere from 5 to 8 lots of copper at the top of the book all day long. And then we have this spike, which tends to be around the settlement times, so New York hours, where there's much more size available in the book. But again, takeaway here is that trading conditions for COMEX copper are very similar no matter what time of day you're trading. Okay, we can move on. So who's trading our contract? A lot of customers, sometimes believe that it's only speculators and hedge funds that are trading COMEX copper, and that all the physical clients are trading, the London Metal Exchange. So I include this slide to say that we actually have an extremely balanced copper market. So this shows the total amount of open interest held by different customer groups. So of course you can see that managed money, so asset managers, hedge funds, CTAs, are the largest segment of open interest holders, but so at 37%, so just over 1/3. However, look at the blue part here. Almost 30% of open interest is held by what the CFTC classifies as producer, but really these are physical clients, could be producers, refiners, fabricators, etc., the physical trade houses. So again, a very balanced market of who is trading and holding positions on copper. Okay, we can move forward. So physical delivery. This is a big difference to other global copper benchmarks. Our contract is only deliverable in the United States. And it's a duty paid price, so slightly different underlying structure to other tradable copper markets, physically deliverable in the United States. Now, I think inventories have been a big talking point recently. We know that there has been a massive squeeze at the LME with inventories falling to 40-year lows. And what you tend to find is that the inventory situation at COMEX is a much more stable profile. So we tend to be tracking this year at about 60,000 metric tons of total inventory, which actually has been higher than available on warrant stocks at the LME for quite some time now. Okay, we can move on. Okay, let me spend some time on aluminium. So I think the question I am always asked, probably most often in my role at CME, is you have a great copper contract, can you develop other base metals? And the answer to that is we are definitely trying, and aluminium to us makes most sense to target very regionally relevant in Asia, Vietnam, Thailand, Malaysia being large centers of consumption in the aluminium market. And of course, it's a huge market, 70 million tons, and represents a very attractive opportunity for us. So we have, in the last 2.5 years, been promoting a new physically settled COMEX aluminium contract. So this is an outright or flat price contract, which is physically deliverable. And the key difference here compared to copper, remember copper, you can only deliver into the US. For our COMEX aluminium, you can deliver globally. So we have warehouses in Malaysia, in Singapore, in Europe, as well as the usual locations in Toledo and etc. in the US. So physically delivered aluminium futures. Now, this is a nascent contract, a new contract. So of course the liquidity is several orders lower than copper, but I hope the chart here illustrates how well the market has been growing. So we're at the stage now of trading about 1,000 lots per day. So that's equivalent to about $70 million of notional. And really the growth this year has been exceptional as we've started to see some of the largest physical traders and banks in the market trade CME aluminium. And why would you come to CME instead of trading, for example, at the LME? It's really a lot to do with the opportunity that it offers in terms of arbitrage against different markets, but also the ease of trading. So remember, our market remains a futures market, monthly futures market. And many customers find this type of contract structure a much more easy thing to trade than rolling forwards and consistently having to do carry trades and things like that. So it's a much more easily accessible and I would say often much cheaper way to get aluminium exposure due to the setup of the market. Now, in terms of the physical aspect of this contract, it has a very large overlap with the LME. What do I mean by that? Every single physical brand that we accept as good delivery on the CME is also good delivery in London. So that has helped the market actually gain liquidity and gain inventories in the CME warehouse system. Okay, we can move forward. Just a quick screenshot of the type of liquidity you can expect in our market. So this is a particularly strong illustration just to show you that our market can get to being 25 cents wide, so one tick, and the size in the book can be upwards of 30 to 40 lots for a very competitive bid ask. And our market is trading entirely on the screen. So if you want to trade spreads, carries, you know, roll the position from January to February, February to March, etc., all of this can be done on liquid, accessible screen bid offers instead of being at the mercy of a broker who may mark up a lot on illiquid or opaque markets in the carries. So an illustration of how our liquidity will look like on any given day. And I think the final slide. So just to show our inventories, so we are currently around about the 40,000 ton inventory mark. Much of that is in Toledo, but we also have grown our inventories in Port Klang in recent months. And then I'll move to the final slide. I think my time is running out. In terms of what our price looks like, so it's priced in the regular units this time, so not dollars and cents per pound, but we price aluminium in dollars per metric ton. It's a 25-ton contract, so it looks and feels very similar to our competition. And the price has tended to actually have a differential to the LME. Typically, COMEX aluminium trades at on average a kind of $20 premium to LME aluminium, but we do see that premium flip into a discount on a fairly regular basis as well. So this arm is driven by where our inventories are held in terms of location, and the fact that, and I think this is important for any key consuming region, we have no queues in our warehouse system. So if you need to remove material from the CME, you do that with no queue, as opposed to other locations, Port Klang now, Netherlands and Detroit from years ago on the LME, which tend to develop sometimes very long queues, 2 years plus to remove material. So no queue and high amount of material in the US, the highest premium market, tends to cause the CME to trade at a premium to the LME. So an interesting arb dynamic there. Okay, so I think that's definitely my time up. Thank you very much for listening today. Again, apologies I haven't been able to get on camera, but I hope you found it interesting and would be very happy to deal with any follow-ups afterwards. So thank you very much.
All right, thank you so much, Sachin, for the summary on the latest developments on the metal products. Nicholas, we will be giving you presentation rights very shortly, and Olive will just do a very short translation, and then you can kick off your segment. Olive?
Yes, xin cảm ơn ông Sachin về cái tóm tắt về những cái phát triển mới nhất của các sản phẩm kim loại CME. Và các quý khách hàng tham dự có thể gửi câu hỏi bằng tiếng Việt. Ban tổ chức sẽ dịch và gửi lại cho các diễn giả. Phần trả lời của các diễn giả ở phần cuối chương trình cũng sẽ được chúng tôi phiên dịch trực tiếp cho quý vị. Nên là quý vị có bất cứ câu hỏi gì thì vui lòng gửi vào ô chat để được giải đáp ở phần cuối hội thảo. Và tiếp theo chương trình sẽ là phần cập nhật về các sản phẩm năng lượng của CME như là dầu thô, bao gồm các hoạt động và xu hướng giao dịch. Xin mời ông Nicholas ạ.
Hey, good morning, everyone. I hope you can see my screen. Yeah.
Yes, we can.
So let's have a look at the energy markets. So and more specifically, crude oil. So 2021 was really the year of price recovery for crude oil, with WTI rising from $40 to $80 per barrel. The main driver behind this huge increase was the gradual recovery in oil demand, in particular transportation fuels, as countries around the world have moved away from lockdown and travel restrictions. So more recently, with the emergence of the Omicron variant, oil price have dropped below $70 per barrel, and the spread of this new variant might play a very important role in oil prices in the next coming week. It is worth noting as well that $80 per barrel is a level not seen since 2014. In other words, a few years prior to the pandemic. And some oil analysts are considering that the market actually enter into a new phase and price could move up against $200 per barrel. So we don't make a price forecast, but instead we stick to a strict analysis of the market fundamentals, which for the physical markets are supply, demand, and inventory. So starting with supply and demand, Data indicates that the supply side is tight as OPEC keep a cap on production while US production is still below its pre-pandemic level. So the US Energy Information Agency, the EIA, forecast that the oil demand will keep exceeding supply until the end of the first quarter 2022. And by the way, this forecast was released just before the emergence of the Omicron variant. Now, a common way to follow imbalances between supply and demand is to look at inventories. And in the case of WTI and US inventories, data that are released on a weekly basis on Wednesday in the public domain, and traders are closely watching this data. Now, if we look at the current inventories compared to last year and the past few years, crude oil stock in the US and at Cushing, which is the delivery location of WTI, are relatively low. So that tends to confirm, that the oil supply is tight. Now, I won't spend too much time on this slide with covering US refineries. What it shows basically is that, as previously mentioned, the demand for oil has gradually recovered and US refineries are now back to almost full capacity. Now, to finish on this overview of the physical market, it's interesting to note that despite high prices, US oil production is still not back to its pre-pandemic level, showing again that supply side is lagging demand. And it's not only the decision of OPEC countries to cap production that led to this situation. The production from private companies, so US producers, have not fully recovered from the pandemic. Now, with this overview of the physical market in mind, let's now have a look at the trading activity of investors in the WTI futures market. So on CME website, we put at your disposal a tool to follow the open position of large traders as reported weekly by the US regulator, the CFTC. So this chart is a screenshot from this CME tool, and it illustrates what was the net long position of investors in the crude oil market back a few weeks ago. So investors are usually net long WTI futures. And it's interesting to see that even if prices moved up significantly this year, investor net long position is still lower than its peak in 2020 and its peak in 2019. So there are usually a few reasons for investors to increase their net long position in WTI futures. The most obvious is when there is a clear upward trend in prices. But on top of that, investors are looking at crude oil markets because of its low correlation with other commodities and financial assets. So in other words, buying oil futures diversify a portfolio. The other reason is that oil and commodities more generally can serve as instruments to hedge inflation risk. And as you know, inflation is a very hot topic right now. So to summarize, the physical market looks tight, and the fear of inflation might bring more investors to look at crude oil futures. But on the other side, any change in fiscal policy, interest rates could pressure oil prices, while the Omicron variant could reduce significantly the oil demand. Now, to finish this short presentation, this chart is a reminder of the amazing liquidity of WTI futures, with well above 1 million contracts trading every day, and 20% of that during our time zone. So this deep liquidity makes WTI futures very interesting instrument, as the bid-ask spread is as tight as it can get, around 1 tick throughout the day. So with that, I went very fast just for a matter of time. This is the end of my presentation. Thank you very much for your attention. And I think now it's time to hear from my colleague Nelson on agricultural market. Thank you.
Thank you, Nicholas, for your insights on the energy market. Next up, we have Nelson Lowe to tell us more about the agricultural products that CME Group offers. Nelson, I'll give you sharing rights right now.
Vâng ạ, xin cảm ơn Nicholas về những cái hiểu biết sâu sắc của ông về thị trường năng lượng. Quý vị đừng quên tương tác với các diễn giả bằng cách gửi câu hỏi vào phần ô chat để được các diễn giả trả lời ở cuối hội thảo ạ. Tiếp theo, xin mời diễn giả Nelson sẽ cập nhật về các sản phẩm nông nghiệp của CME, bao gồm các hoạt động và xu hướng giao dịch. Xin mời ông.
Right, go ahead, Nelson. Over to you. I believe you're on mute right now, Nelson.
Okay, great. Okay, cool. Hi, good morning to everyone in Vietnam. It's a pleasure to speak to this group again after some time. It's always a pleasure to speak to the audience in Vietnam. I think many of you I've met before. I feel sorry that I have not had a chance to see you in the last 2 years. So I hope this virtual presentation will be helpful for you. And of course, we had really great speakers just before us, David, Sachin, and Nick, all presenting on their asset classes. So I will take a little bit of time to present on the agricultural suite of products at the CME Group. And I know many of you are very active in these markets. So I'll just give you a really quick update. I think David gave a lot of very good color on the markets already, on the grains, on corn, wheat, and soybeans. I don't think I can add too much to that. He is, after all, the expert in the market outlook. But what I can do is just to share with you very quickly a few latest updates on the CME agricultural products, such that you're kept informed on what's going on. But very first, let me start by saying by covering the major imports that go into Vietnam for the agri products. I think many of you are very familiar with what Vietnam imports from the world. But for those of you who may not be familiar with the other products, you can see that Vietnam imports a lot of agri products on an annual basis. Corn is actually the biggest commodity that's imported at 10 million tons. Following which soybean meal is the next biggest, and of course Vietnam imports many other commodities as well, such as wheat, soybeans, and soybean oil, as well as palm oil. So I'll be covering on some of these products in the next few slides. And very first, but before I begin, let me just introduce the CME products that you can use to trade many of these commodities. Many of you are very familiar already with our products, but for those of you who've never seen some of these products, we have contracts in corn, wheat. For wheat, we have 2 contracts. We have a Chicago Board of Trade soft rate winter wheat contract, and we have what we call a KC wheat or a hard rate wheat winter wheat contract as well. We have both of these contracts available at the CME Group. On the soy complex, of course, we have soybean futures, soybean meal futures, and soybean oil futures. And we have options on all these contracts as well. So let's begin with wheat. We have what's latest and greatest in the exchange. Now, for many of you that trade the wheat futures contract, you're probably trading the Chicago Board of Trade wheat contract or the Kansas City wheat contract. But what you find is that we also now have a 3rd wheat contract available at the exchange, and it's called the Black Sea wheat contract. Now, Vietnam does import a Black Sea wheat. So for those importers who are importing wheat from Ukraine or wheat from Russia, this is definitely one contract that you can use to hedge your purchases. It is slightly smaller than Chicago contracts. It is 50 tons per contract. And it has traded very well since we launched them. Since a few years ago, we have roughly average daily volume of about 1,200 contracts for the year so far. Open interest is all the way out to August 2022, and many of the trades are now beginning to occur on screen. 20% have gone on screen, and over more than 100 firms have already been trading our wheat or Black Sea wheat futures contract. This is what it looks like since we launched them back in 2019. You can see that the volume has grown steadily over the years, as many customers find it very useful to hedge their Black Sea wheat exposure. Open interest has also grown over the time as well. Besides Black Sea wheat, we also have now a Black Sea corn contract. Again, if you're familiar with the Chicago Board of Trade corn contract, that is a US corn contract. In the case of the Black Sea wheat contract, which we launched a few years ago, this is based on the Black Sea wheat coming out from Ukraine, primarily Ukraine and Russia as well. You can see that, again, similar to Black Sea wheat, the contract has picked up a good interest over the years. And of course, every year the volume continues to grow. Vast majority of these trades are still traded as blocks, but participation is greatly increasing. Open interest is now out to March 2022, and more information can be found at the following links. You can take a snapshot, a picture on your mobile phone, and you can, at your own time, you can go to these websites to find out more. I'll talk very quickly about soybeans. As I know, not many of you import soybeans, but it's more the crushers that do. We launched a South American soybean futures contract back in last year in 2020, and it's a very interesting contract. It's a cash settled contract that settles against a Platts index. What is interesting is that now you can trade South American soybean futures against the Chicago Board of Trade soybean futures. So you can actually trade the two different origins today on the same platform. I'll touch very quickly on palm. Vietnam imports a million tons of palm every year, and the CME group has a really great palm oil contract that importers and traders can use. So if you are importing palm oil, you can definitely use the CME palm oil contract to hedge. And of course, if you're using, if you're trading soybean oil, palm oil is a very important contract for you to look at as well as to use, especially if you're looking at the different spreads between the two. So this is what it looks like, the palm volumes over the years. We launched this back in 2013. So almost 8 years ago, and you can see that the volumes have grown dramatically over the years. And in 2021, the volumes are at all-time record highs. You'll see that right now at the quarterly volumes, this is as of Q3. You see that the best quarter was in Q2, where we traded almost 60,000 contracts that quarter. Q4, just in October and November alone, we have really exceeded the record. So with one more month to go, the month of December, which we are in now, we have already exceeded the volumes of that month. Year to date, this is the numbers as of October, but the latest numbers as of yesterday is we have crossed 200,000 contracts for the year already. So a very, very strong and interesting contract. Many people are beginning to use this contract. It's a very important contract because it's in US dollars denominated. So a very useful contract if you are an international exporter or importer. And it's very liquid as well. We've launched this since 2013, and all of our customers continue to use them and continue to trade them even more. And this year, you have seen the volumes to have shown exactly that. Again, more information is available at the link. Please feel free to take a snapshot of this slide, and you can go to the CME website to learn more about the CME palm contracts. No surprises, very exciting times in palm oil. record highs, continue to be broken. And this is a simple chart of where the CME Malaysian crude palm oil futures contract has been hitting. It crossed the $1,000 per metric ton level 2 months ago, and it continues to maintain its levels in the last couple of months. A lot of things going on between palm oil and soybean oil. You've heard David talk about soybean oil and palm oil as well. There are many different factors at play that's causing the drive in interest. And of course, as David mentioned, the energy angle to the usage of palm oil and soybean oil has been a major factor driving the market higher. Now, as importers, there's a very interesting thing that you can do now, especially with the CME palm oil contracts. You can now actually ask your exporter to provide you a basis price. So you can actually now buy palm oil as basis plus CME futures. And this is a chart of the basis. You can see that the basis line has been fairly stable in the initial couple of years from 2018 to 2019, but has since shot up over the last 2 years. Now, basis is a very common way for agricultural importers like yourself and your customers to use. So now you can do this in palm oil as well, whether it be it from Indonesia or whether you're importing palm oil from Malaysia. These contracts can be used as a mechanism where you can price your cargoes. Finally, I wanted to take a couple of minutes just to talk about options very quickly. I know some of you are very new to options, but options have been a very long part of the CME Group agricultural suite. Out of every 5 contracts that is traded at CME Group, 1 is an options contract. So we're talking about 20% usage of options compared to futures. So it is a very important part of any risk manager's portfolio, as well as any risk manager's tools to use to price and hedge your cargoes. You can see that the first half of the year, the options market has been very, very active, especially among Asian participants. The chart that you see here is the volume that Asian participants have been trading, and you can see that they've in the first half of this year, the participation from Asian customers have tripled over the previous years. So there's 2 things that I think is specific to this. The first is many Asian participants, customers are beginning to use options. And the second thing is that not only are they finding the options useful, but they're also finding some of the options like the weekly options and the short dated options to be of great value. Again, in the interest of time, I will not go too deep into explaining the differences between this, but please do let us know, let any of us at the CME Group know if you have questions on what some of these options are. We'll be very happy to speak with you to give you a deeper explanation on many of these products, as well as what we are seeing customers more and more interested in using. With that, I've come to the end of my presentation. Again, feel free to go to any of those links to find out more. And of course, we always remain available to answer any questions that you might have, as well as to speak with you on a one-on-one basis if need be. With that, Sri, I'll hand the podium over to you.
Thank you so much, Nelson. Dear members of the audience, you've just heard from Nelson Low, the Executive Director for CME Group, and he covered agricultural products that CME Group is offering. Once again, thank you to all our speakers. Audience, now is the time for you to type your questions in the Q&A box, in the question box for your control panel. The box is located at the bottom of the control panel. You can type your questions for David and the rest of our speakers today, and we will pick them up shortly. How?
Vâng ạ, xin cảm ơn ông Nelson đã có những chia sẻ và cập nhật về các sản phẩm nông nghiệp của CME. Thưa quý khách hàng, phần chia sẻ của ông Nelson cũng là cái phần chia sẻ cuối cùng của các diễn giả ngày hôm nay. Quý khách hàng có bất cứ câu hỏi gì, vui lòng gửi vào ô chat để được giải đáp ạ. Phần hỏi đáp này chúng tôi sẽ phiên dịch, phần trả lời của các diễn giả sẽ được phiên dịch trực tiếp sang tiếng Việt. Quý khách hàng cũng có thể gửi phần câu hỏi của mình bằng tiếng Việt, chúng tôi sẽ dịch sang tiếng Anh để gửi cho các diễn giả.
Okay, our first question is to David, of course. With the Fed announcement last night, how can we expect the market to react? Can you give your perspective for the near term, medium term, say 3 months and 1 year?
What was the first part?
Okay, the first part is with the Fed announcement last night, how can we expect the market to react? Give your perspective for near term and medium term, 3 months and 1 year. David? Sorry, can we have a translation for the question, please?
Vâng ạ, chúng tôi nhận được một câu hỏi về tình trạng backwardation ở rất nhiều mặt hàng hóa, tức là tình trạng giá kỳ hạn gần cao hơn với giá kỳ hạn xa, trong đó có dầu thô của CME. Theo ông thì tình trạng này còn tiếp diễn trong thời gian tới và khoảng bao lâu ạ? Có thể là 3 tháng hoặc là 1 năm.
The decision was fairly widely anticipated. It did not offer anything surprising. The markets believe the Fed is a little bit behind in their battle on inflation. And so in the near term, there's not likely to be a big impact. But as we continue to document infections, infections are impacting supply chains. And according to the Fed, the supply chain is the biggest contributor to inflation. So it's the COVID might be more important than what the Fed is going to do. But in the long run, this major change in interest rates has started. Whether we're going to actually raise rates in 4 months or 6 months, but it's like a super tanker. It's beginning to turn in the water. So that turn has started and it's not going to stop. So it's not going to scare the stock market unless the Fed gets behind, and then they have to make multiple hikes, and then things get ugly.
Okay, our next question is, many of the commodities market are in steep backwardation situation, including crude oil. How long will you see this situation keep going on, and when market may turn back to contango? Olive?
It's just the question just now.
Read
again.
So the crude oil market in particular is probably going to be the leading indicator because it is signaling the bull market status. But today, the International Energy Agency predicted that this month would be the first month that supply actually came in bigger than demand. So the holdbacks by OPEC have now run their course, and we are at an equilibrium price in the price of oil. Okay, so that means that the backwardation in the oil market is at probably a juncture where it's going to change. Individual markets, other individual markets, their demand is not as influenced by the ebb and flow of infections. It's more so the big picture of the economy. So I would expect the other markets than crude oil to stay in backwardation longer.
Okay, for our third question, can David give and outlook on gold, our favorite precious metal, and where is it heading going forward with the US Fed tapering situation?
This has been the most surprising action that I've seen in my 40 years in the industry, to see the kind of inflation readings that we've had and see the gold market go down. Last year, we had a huge influx of ETF money flowing into gold, and this year we've seen a outflow from gold. So gold is continuing to trade like a classic physical commodity and is not included in those financial instruments like Bitcoin, the dollar index, and treasury bonds. But when you look at the internal fundamentals of gold, demand is outstripping supply. And so we're expecting too much out of the gold market from an inflation perspective when its actual commodity setup is pretty supportive. And so when you look at prices at 1,700, that's a cheap price for gold. And if there is an inflationary scenario that the Fed gets behind, I think that as our speaker asked for more volatility in the metals markets, well, that'll probably happen. So it's very surprising, but at some point the gold market is going to turn on like a light switch.
All right, thank you for being a wonderful audience. I believe that's all the time that we have for today. Once again, a big thank you to our partners, CME Group and TDT Asia, and also a big thank you to our keynote speaker, David Hightower, for his valuable insights.
Dạ vâng ạ, kính thưa quý vị, buổi hội thảo cũng đã đi đến phần cuối. Thay mặt ban tổ chức, tôi xin một lần nữa cảm ơn sự có mặt của tất cả quý khách hàng ngày hôm nay. Xin cảm ơn các đối tác, CME Group và công ty TDT Asia, và đặc biệt là các diễn giả đã dành thời gian quý báu của mình để đem đến những cái chia sẻ đầy tâm huyết và hữu ích cho hội thảo ngày hôm nay ạ. Và hy vọng thông qua buổi hội thảo ngày hôm nay, quý vị đã bổ sung thêm cho mình những cái thông tin bổ ích về thị trường hàng hóa và đầu tư. Chúng tôi sẽ cố gắng gửi cái phần record của cái chương trình hôm nay trong cái phần email, phần tiếp theo sau hội thảo.
All right, thank you everybody. That's all the time that we have for today. Stay safe and goodbye.
Goodbye, Nelson.
Goodbye.
Goodbye, David. See
I
ya.
hope it's not 3 years till I see you.
Very blessed Christmas and to the family and yourself as well.
Dude, thank you. Thank everyone.
Merry Christmas, everybody. Bye-bye.
Okay. Thanks, guys. Thanks to the team. Thanks, Juan.